Hi, without much ado, we want to continue on this series on what causes traders to lose money. Okay, it looks very simple, like I always say, but if one overlooks these important factors, the problem that it results in becomes larger than the profit one is expected to get. And this is a major problem because most traders take it for granted or feel like it does not have any financial implication to them. And if that mindset is what you have and you're listening to this, you are at the right place. Okay? And if you've been following me so far, welcome back. If you're new here, don't forget to follow, subscribe, like, and even save it so that you can come back and watch it later in your collections. Okay, without much ado, let's look at another trait of a losing trader. And this is one thing I've noticed over time, is that one thing every person in business knows, especially one lesson every trader knows, is there is no certainty with trading. However, what counts is probabilities or probability. This is what I mean. I've always said this. If you listen when I'm making my nuggets of the day, talking about what causes traders to lose money on this series, you'll notice that I pin more on probability than on certainty. Because trading is a probabilistic venture, not a venture of certainty. Okay? The only thing that reduces probability to almost, or makes probability 100%, where almost 100% where you win all the time, is real estate. Because you're seeing the product itself, it can't be carried and it can't be taken away from there, and the land is going nowhere. So your assets are there in front of you every time. The only thing that happens is that it depreciates in value because of the building getting old. You need to refurbish and do one or two things. But when it comes to trading, one thing that is certain is that it is uncertain. See, it's funny, it's lovely to talk about it, but it's painful when you're the one experiencing the stick end of the carrot. Okay? Because I've come to realize this. Let me tell you a story. When I started trading, my journey, on this journey of trading, I realized something, that I take trades. Like, first things first, I noticed, in fact, the overview, the first mistake I was making, it wasn't any mistake per se, it was what made me better right now. Because when I started trading, just like drivers who learn with manual and now convert to automatic are better drivers than those who just learn with automatic. You can argue with yourself about that, but that's the fact. The same thing with trading. Traders who trade the hard way, once they make the strategy simple, they become better or fluidized, or they become fluid when it comes to the trading. Be like water. Okay? This is what I mean. When I started trading, I do what we call market correlation to identify the strength of the currency. Nothing wrong with market correlation, but the market correlation is to identify the strength of the currency. This is what I mean. I do for 28 pairs, nothing less than that, every single day. Every single day. It's even more than that, by the way. This is what I mean. For all the pairs on euros, Euro USD, Euro Swiss franc, Euro pound, like that, I do them. Then I go to US dollar yen, US dollar Swiss franc, pound US dollar, and I don't just do US dollar yen on just one time frame. I start from the weekly down to, I stopped at 30 minutes time frame. Down from the weekly down to 15 minutes time frame. Yeah, I was moving from 15, I now went to 30. Yeah, stopped at 15 minutes time frame because my mentor who taught me how to trade focused more on weekly, daily, 4 hours, 1 hour, and 15 minutes time frame. There was no 30 minutes time frame with the strategy he taught me. Okay, so with that being said, I do that for each particular currency pair that aligns with either the base or the counter currency. What I mean by base and counter currencies, if my base currency is euro, now that means I want to do everything that is attached to euros generally, everything attached to euros. And when I've done that, the currency pair I want to trade, if it's euro USD, then I have to do everything concerning euro USD. But if I want to become robust in the strategy, I will now do for all the currency pairs, all of them. Once I've done that, this is what I do. If the currency pair, if for instance on this time frame, if we are in buyer's territory, which is bullish, is +1. If market is ranging, 0. If market is coming down for that currency, -1. There's never +2 or -2. From 1 to -1, as in 1 0 -1. By the time you do this, I now have a table that comprises the summation of those values. So for euros, if the euro, all the euro pairs, if it gives me +1 +1 +1 +1 0 +1 +1 +1, that means euros might be 6 or 7, which most times is the highest. I do for US dollars. Now, I did this on an Excel sheet where the back end is where I do all this comparing of the currency based on strength. Then the other end, which is the front end, is where I display the outcome of the comparison. Okay? That's where I display to now see the strength. To make it even easier, you can now attach it to bar chart so that you see the bar that is the tallest. You don't need to start thinking too much. Bar that is the tallest, and you now look for the bar that is in the middle. So most times it's safer to trade highest currency to the median currency, or the one that is not very weak but in the middle. Okay? Some people like to trade highest to weak currency, but that means that the currency will be very, very volatile. So highest to weak to medium means that you're trading a currency that is not very, very volatile but can be a leading currency pair. Okay? Because one thing again my mentor taught me was identifying leading currency pairs and lagging currency pairs. Once you know this, you go for the leading currency pairs because those are the ones that will perform very well. But once you've identified the leading to the lagging currency pair and you've missed the move on the leading, you go for the next leading one and you trade it. If you miss that one, you go for the next leading one. You see how complex the strategy was? But that is what made me stronger right now. I now realized a method in solving this without going through this process of identifying the currency pairs. All these things were done with a mindset that the only thing certain about trading is that it is uncertain. So it's only a fool's game to think that your strategy is foolproof, is very certain, you must win all your trades, or at least your probability is 100% that you would win, which is winning all your trades. Because certainty when it comes to trading is an illusion, while probability is the only truth. Once you have this on the back of your mind, you start becoming a better trader. You move from a trader who is suffocating to a trader who can define how he or she breathes when it comes to trading. Because a diver, if I give you the oxygen max and say, okay, go deep sea, like go in, dive. If you don't know how to even dip yourself in the water, then your breathing time, you will finish that oxygen tank, what the oxygen that is in the oxygen tank, faster than an experienced diver. The same thing comes to trading. You would exhaust the oxygen in the tank is like your balance, your money in your brokerage fund. That is the oxygen in your tank. Once you finish the money, margin call, done for the trading. But if you can manage yourself where you control your breathing so that you don't exhaust it, whereby you can come afloat, because all traders have this curve. You start here and you dip before you come out. If you can manage to come out and stay out of this level where you started from, this is where trading becomes sweet for you. Okay? Now, this curve is what every trader is trying to shorten or flatten, where they enter and they quickly, if they enter, they quickly just come out and remain up. While those who go deep learn a lot of lessons that if they manage ever come up, if they have the memory to journal all their setups, what caused them to lose and why they're winning now, they will be very, very, very rugged traders because they've seen almost everything that would make them lose. And now they will try not to make that mistake because they will become more disciplined, because they have taken trading now not as a fun game, but as a serious profession or a serious game. And every serious game is a business. Okay? So the concept for today's episode on this series on what causes traders to lose money is simple. The only thing certain about trading is that it is uncertain. That's the only thing certain about it. And once you have this inside of your head, you would control how much you lose and how much you can take and survive and wait until the point where market becomes very easy to catch more. And when market becomes difficult to catch more, you reduce less, you lose less. Again, the formula is this: win more than you lose, and you're a profitable trader. Because you will definitely lose, and if you're a good trader, you will certainly win, and you will certainly lose. Those are the things that are certain about trading. But what makes one trader profitable, trader A profitable, and trader B not profitable, is that trader A has learned to make his winners more than his losers, while trader B has not learned to make his losers less than his winners, whereby the losers is now more than the winners, causing him to be deep in the ocean and running out of oxygen. So for you to come afloat and have oxygen that will bring you afloat and sustain you till you get rescue team or rescue crew to come and rescue you, you need to understand how to breathe. And the breathing in trading is understanding that the only thing certain about trading is that it is uncertain. Okay? Now, if you've watched to this point, then I'm certain that you are getting information from this. If you've not followed me, subscribed, or even saved this by now, I implore you to go ahead, save it, like, subscribe, and tell me what you think are the other traits that causes traders to lose money. Okay? I'll stop here for now so that you can watch this. I don't want it to be too lengthy, but it has a lot of information packed in it. If you watch it once and you don't grab as much as possible, come back, watch it again. I bet you, each moment you watch any of my videos, you will get something new from the first time you watched it. If you doubt me, go and try it. This is not a gimmick, this is the fact. Because what I'm telling you is pure, undiluted truth that is coming from experience and not just studying of Trader in the Zone or Disciplined Trader or any of the trading books. No, these are facts. Okay? I'm going to stop here for now. Thank you for staying this long. And don't forget, I appreciate you for staying this long. Don't forget to like, subscribe, follow me, save this, and tell me what you think about the causes of traders losing money. What causes them to lose money or us to lose money? Okay? Bye for now. Peace.